Hi there, I'm Diane Bertolin, your friendly neighborhood mortgage agent. Welcome to my first vlog. It's wonderful to have you here. Today I want to talk to you about the alternative lending market, sometimes referred to as the B market or the subprime market. I know those names tend to conjure up images of a shady person in a dark alley where they're kind of whispering to you, hey, come here, I got a deal for you. But really that's not what it's about. So the question becomes, what is the alternative lending market? Well, let's start with the A or the traditional lender. An A lender refers to banks and credit unions that cater to customers with good credit scores and a reliable income. The institutions that cater to this type of clientele tend to be what we call the Schedule I banks, such as CIBC, National Bank, BMO, and the like. B lenders refer to institutions that offer a lower barrier of entry to qualify for their mortgage products, but can offset that risk with a higher interest rate. There's lots of reasons why people will fall into this category or need to go into the B market. Some individuals that may fall into this category could be somebody that is a recent immigrant, someone that is self-employed, somebody who was laid off for a period of time but now is re-employed, someone that may have been discharged from a bankruptcy or a consumer proposal. There's some reason why there is a perception that you are somewhat of a higher risk. Credit unions in Ontario can either cater to the A market or the B market or both. It really depends on the mandate of the credit union. The last players in the alternative lending market are the private lenders. These are individuals that lend out their own money. The money that is lent from this segment of the market tends to be the most expensive money that you will borrow. The risk to the private lender is enormous, and you're going to have to pay for that risk. There's lots of reasons why individuals may need a private lender. They fell into tough times, they may have some blemishes on their credit that they just can't get rid of, or they're self-employed and proven income when you're self-employed, or you've had a couple bad years when you're self-employed, and you might just need a private lender to hold your mortgage for a year or two. The bottom line is you need to know what you're signing with any mortgage. You need to know the risks involved with it. You need to understand what happens if you default or miss a payment. You need to understand what the penalty provisions are. And you need to understand if you can afford that monthly payment. You do not want to default on a mortgage. It will blemish your credit for a very long time. So you have to be able to go to bed at night knowing that you can make that payment month after month for years at a time. But if you're working with a good mortgage agent, they'll find you a suitable mortgage that meets your financial goals. You want to get out of the B marketplace as soon as you can. So you tend to take a shorter term with some of these lenders, so you build your credit up, you make those payments every month, you don't max out your credit cards, and then when your mortgage is due after a 3-year or 5-year period, you can negotiate with an A bank and get a better interest rate. It's all about discipline. That's it for me today. I hope you enjoyed this blog. Give us some feedback. I'd love to hear from you. That's it. I'm Diane Bertolin from Unimore Capital.
Mortgage Answers, professional integrity experience. Mortgages for singles and families, developers, businesses, mortgages for everyone at DianeBertolin.com.